Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Egld. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now, if you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right-hand corner of the screen. Now, taking a look at Egld on the daily chart. As you can see, we have broken out of this channel down pattern that we were in for a couple of weeks, and so far we're doing pretty good. In general, Egld has been doing very good. Now, we did lose the September low that we printed here, which is quite negative, and we haven't lost the June low yet. So effectively, we've been in this sideways channel for quite a while, and really we've been going sideways. As you can see, at some point you're gonna have to break out, and I do think the fact that we are very oversold right now goes to show that the possibility of us breaking even lower is there, but it's really not significant at all, because if we take the all-time high and we drag it all the way down, then we have corrected 93%. So I do think the 1.618 could be met here from the smaller Fibonacci retracement, which would be our technical target, and that would put us at 93.4 cents. And if we go all the way down to 30 cents to $30, $31-ish, then that would be a 94.5% pullback. So this is relatively speaking what altcoins go through in a bear market. So I would say these are good numbers to start dollar cost averaging into Elrond. I do think the project is going to be successful during the next bull market, and I don't know if we're going to get back to the previous all-time high prices, but I do know that if you've done your research on the project, you know what you're getting yourself into, and yeah, just have your strategy planned out in advance, know where you're going to be buying, know where you're going to be selling. So for now, we don't need the larger Fibonacci retracement because we presume that the low that we printed in June is going to be our low, but for now we don't know if that is accurate, obviously. And what we can actually do is we can drag this all the way down to the low that we printed in June and the high that we printed in August. And as you can see, right now we're breaking above the 0.786, and we are well on our way to the golden ratio at $48. Now, we got rejected from that golden ratio back in November after the FTX crash. We had a little bounce, rejection from the golden ratio, and we went back down into this channel down pattern. So potentially you might run into resistance at $48, and that could be a nice take profit for anyone entering at $40 here. That would be, let me get the range there. So that would be a nice 18.4% move. But I'm not going to be selling any Elrond at this level, to be honest with you, because when I swing trade, I look for the overextension, right? I need the RSI to be overextended. I need the EMAs to be overextended from the price action. So in this case, we are simply getting above the 20 EMA. So this is, this could be the typical rally that we see before the CPI data and the interest rates hike. Usually we do see something like this, right, where you start climbing up and then you get the inflation data, which is worse than expected, and then you see the move to the downside. So in case that scenario plays out, I would be looking at the top of the channel down pattern as support. So we may land on the top of this channel and back test that as support before eventually starting to climb back up, potentially taking out the golden ratio if we fail to do that this time. But the FOMC meeting is happening December 14th to 15th, and I think we're going to get our announcement on December 16th, I think. I'm pretty sure that's how it's going to go. So yeah, in this case, if you're pretty sure that the interest rates are going to be getting another hike and the inflation is going to be worse, then you could be taking some profits. You could also target the 0.5 Fibonacci retracement at $51.50. That could be another one. and you also have the 0.382 Fibonacci retracement that you could be taking advantage of. That's at $55. So multiple resistance levels above, but I would just argue that this is us simply printing a lower high before we eventually drop back down, because as you can see, that's exactly what we have been doing since August. So we are in this local downtrend here. And for now, I don't see us breaking out anywhere until we get to spring of 2023. I think that's when things are going to start looking a bit more brighter for the crypto markets. Until then, we can obviously dollar cost average into every single altcoin we like. We have enough time to fill out our bags with everything that we need for the next bull market. So there will be no excuses come the next bull market, because you did have your time. You had your time to research. You had your time to make money and dollar cost average in. So there is no one to blame but you. That's why I'm doing my research. I'm investing into projects, and hopefully I'm going to become financially free next bull market peak. And hopefully we can do that together. Hopefully we can learn and grow together in this community that we have going on. So that's regarding the daily chart. Obviously, the Fibonacci retracement, as you can see, that's the swing low and that's the swing high. If we break above the golden ratio, there's going to be a strong chance we might see a little pump, because usually once you break through the golden ratio, that's a very good sign. However, like I said, the CPI data and the interest rates could really push the price back down. Now, switching over to the daily chart, as you can see, we do have a move to the downside November 9th once we saw the FTX crash. From there, we've been recovering, which is nice. Another resistance trend line that we created here is just this one over here, if I place that correctly. There we go. So that is something that we're going to be targeting for exits. So potentially we could run into that white trend line for the third time since October 4th. So we had October 4th, we have November 9th, or was that November 4th? And we have December here for the last sort of touch. And in case we see a capitulation, the green trend line below is a major support trend line, because we've been there 3 times since January 2022. So January, May, and June, 3 touches. And once you're in that area, in general, right, once you're below the index of 30, that's a good buying opportunity. However, if you're chilling at the green trend line there, then mathematically speaking, there is a good chance you're going to make some money short term, even if you buy, for a quick trade, basically. So take a look at the RSI, draw this out. This is pretty important in my opinion, because if you're looking for good entries, that's something to target. And let's switch over to the Binance website. Taking a look at the weekly. So volume, we're starting to see some nice volume coming in here, but nothing too significant for now. I don't see any big movements. And when we're breaking through major resistance levels, we need that confirmation from the volume. Now, taking a look at the stochastic on the weekly, we are in the oversold since February this year. So this is a very good buying opportunity throughout 2022, and hopefully in 2023 to 2024, we're going to be in a much nicer position all the way up here, where we actually can take some profits and make a lot of money because of our patience. And taking a look at the MACD, we've had the bullish cross since July, and we've been in that uptrend ever since. I've been talking about this for many months on the MACD, and with this apologies about that. The same thing happened back in August of 2021, where we had that overextension until November, and then we had that move to the downside. So potentially, we're going to see that move to the downside play out sometime in December or January, right? We're not done with the FTX FUD. More things are going to get uncovered as time goes on. So let's see. We have to be ready for both outcomes at all times. So the fact that the markets seem okay and we've gone through everything, well, no, there's always that one new thing that can drop the markets, that black swan event. And taking a look at the weekly RSI, as you can see, the pink trend line is a major support level that we've been holding since September, and we've had a bounce in November, the most recent bounce anyway. And in case we see another move to the downside, that pink trend line is a major level for us to hold. So keep an eye on that. And we also have a major descending resistance trend line that we have created in February of 2021, another retest in November 2021. So potentially once we see that breakout, let's say sometime in spring 2023, we have the retest, and then you have the move to the upside in 2023 and 2024, getting overextended and having the move back to the downside once we enter the next bear market. So that is obviously a very perfect scenario, not going to play out like that, I'm pretty sure, but that's generally what I'm expecting, because I think Bitcoin is going to start recovering in March, April, May, right? We might see that usual crash in April, May. We might see that crash to sort of shake out the last weak hands, and then we might see the first strong move to the upside until August 2023, followed by the regular August pullback, and then we have the next strong move in fall of 2023, followed by the halving and the bull market in 2024. So I think that's a legitimate theory. Hopefully it plays out that way, although I don't know, right? But that's pretty much it for the Egld token on the weekly chart. We are in the support block from $45 to $35. Great buying opportunity, and we're sort of starting to break above this trend line, this resistance trend line that we created in November of 2021. However, it doesn't look like there's much force behind this move for now, because the volume isn't really confirming that. The RSI has had a nice bounce, so that's good, but based on the price action, we really need to start closing candles above that, and holding the pink trend line as support would be very crucial. Once we do that, then we're confirming that the orange trend line, rather, not the pink trend line, the orange trend line has flipped to support, and that's generally good on your chart. So let's see if this ends up being another fake out, just like we saw over here. Very possible that it could be, like I said, because of the CPI and the FOMC meeting happening this month. So that's pretty much it. Thank you all for watching. I'm gonna see you in the next one. Goodbye and good night.